Joe, Michael, how are you today?
Good morning to you, Martin. How are you?
I'm doing great. Thank you very much. Looking forward to a great show again today.
Yeah, it's hard to do a bad show when you and I are doing this together. Let's welcome everybody to AGTP Daily Barn. We go live every weekday at 11 a.m. Eastern to discuss the most important tech stuff, tech stories in the US. Today is the 2nd of June, 2026. Let's get right to it. Alphabet, does anybody call it that? This is the parent company to Google. They're raising, this is interesting to me. I really want to spend some time talking about this because I want to get your opinion on this as well. But they're going out like into the public markets, and it's weird. $80 billion is a lot of money. Doesn't seem like a lot of money for a company that is worth 4 point something trillion in valuation. We'll get to that. And I've been thinking about this for a while, but I saw a story on it today, so I wanted to talk about it. The second thing we're going to cover is these companies that were funded and founded before ChatGPT was released. You know, the headline that I wrote says they're going to face a reckoning. Well, what does a reckoning mean? We'll get to that as well. And one of our favorite SaaS companies, Salesforce, actually has a stake in Anthropic. And there are multiple reasons why this is important. Hopefully we'll have enough time to get to that. But I wanted to talk about all three of those things tonight because I think that they're all really interesting. They all tell a kind of different story, but they're all kind of related at some level. How does that sound to you, Martin?
That sounds like a really great show. So let's start.
Let's start. Okay, let me give you, as I like to do, let me give you some details and some context on this Alphabet thing. I'm going to keep calling it Alphabet. So they've announced an $80 billion, equity capital raise to fund a major expansion of AI infrastructure and compute capacity. The company, so Alphabet is saying that customer demand for AI solutions and services is exceeding its available supply, even for Google. I'm going to say Google, sorry. I know it's Alphabet, but whatever. And that the new capital is intended to help its global compute base. Let's talk about what the details of this as well. The raise includes $30 billion of underwritten, that's debt, public offerings, $40 billion through an at-the-market stock program expected to begin in the third quarter of 2026. That means they're going to issue stock at the current market price, not at a discount, not at a premium, but at whatever the current price is at the time. And Berkshire Hathaway, Warren Buffett's old stomping grounds, is going to invest $10 billion in what does it say, in a private placement to Berkshire Hathaway, probably at some discounted price, because they're going to pay $10 billion for it. Yeah, there are a bunch of other details, but the important thing is here, it's just not all of this $80 billion is going to be read as like a simple incremental AI growth, although that's what most of it's for. The company says that proceeds from the underwritten offerings and the private placement are going to be used for general purposes, which is shocking to me in a way, including some of their AI infrastructure stuff, but about 30 billion of it are expected to be used to meet tax obligations. This is just really interesting, Martin. And let me give you a few more details, and then we can talk about like why this matters to us, actually. You have to understand just how large their CapEx and spending already is. Okay. In quarter 21, we don't spend a lot of time talking about Google and Alphabet, so I think it's important to put this stuff into context. The company said 2026 CapEx would be $180 billion to $190 billion. Now, you may remember off the top of your head what the Facebook numbers were, again, Meta, but whatever. That was like 135 to 145. So in line. I mean, I wouldn't say that there's a massive difference, even though percentage-wise it's a big difference. But when you're in the like 130 to 140 billion, if it's 180 to 190, does anybody really care?
It's like 40
Is the real
billion,
question.
but yeah.
But it's 40 billion, but like, who cares? You know what I mean? The numbers are so big that it's just like, how much bigger does it have to get for someone to actually notice the difference? And they're also saying that 2027 CapEx is expected to increase significantly again. But here's what's super interesting to me, Martin. I mean, the whole thing's interesting. Alphabet disclosed $174 billion of operating cash flow over the last 12 months.
Oh, wow.
Okay. And more than $85 billion of debt issuance, taking total debt above $100 billion, which again is literally nothing for a company that's worth $4 trillion. Okay. And also, the company is doing this offering in the context of like really strong operating numbers. They reported Q1 2026 revenue of about $110 billion. That's up 22%. Google search and other revenue was up 19%. Google Cloud revenue, Martin, was up 63%.
Oh, wow.
And here's the key. There's a cloud backlog of more than $460 billion. 350, these are backlogs, 350 million paid subscriptions and more than 8.5 million developers using its models monthly. The problem they're having here is that there's too much demand for the stuff that they have. But the interesting thing, Martin, is, and here's the thing that I want you to think about a little bit, is why would they raise money
Yep.
when they're throwing off so much cash?
Yes. That's a good question. It's a good question.
Mm.
Tell me.
Do you have a good answer?
Tell me what you think.
I don't know. I don't have a good answer. So the first thing is Berkshire Hathaway, which used to be run by Warren Buffett. Warren Buffett invested in almost no technology.
Okay.
So the new guy that took over for him, who had been running some of their operating stuff for a while, this guy named Greg Abel, is probably, I didn't look up his age, but he's definitely younger than Warren Buffett, who's like 90-something years old. They're not going to replace a 90-year-old with a 90-year-old. That would be stupid. What is this, the U.S. Senate? Like, that's the only place where a 90-year-old replaces a 90-year-old. But the point is that, so why would they do this? One is that now they have the backing of Berkshire Hathaway.
Okay.
And again, $10 billion is not a lot in the context of a $4-point-something trillion company, but Berkshire Hathaway is a very, very influential investor.
Mm-hmm.
And while there's always a good bid under Google stock, having Berkshire Hathaway in there, there's so many people. Like the thing about Berkshire is that it's almost like its own index.
Mm-hmm. Mm-hmm.
So the Berkshire Hathaway stock has never split.
Okay.
So if you bought it at like $2 in 1962, I don't know where it's trading now. Actually, let me just double check.
So what does split mean? What does it mean when the stock split?
Give me a second. Oh, maybe they did split this thing finally. Let me just go to max. Give me a second. Yeah, no, it has split. So what does it mean? A stock split means, let's say you have a stock that's trading whose current price is $1,000 a share. It's $1,000 a share. And let's say there are 1 million shares outstanding.
Okay.
Well, not everybody can pay $1,000 a share. So you want to widen your investor base. So how do you do that? You want to make the stock cheaper.
Mm-hmm.
So you take every stock, if it's $1,000 a share, you can split the stock into 10. You don't change the valuation of the company. You don't change the dilution. You don't change anything. You just lower the price and increase the number of shares that are outstanding. So now it's worth $100 a share.
Mm-hmm. Okay.
And now there are 10 million shares outstanding.
Mm-hmm. Got it.
Simply. And what that means is that now more people can buy it.
Mm-hmm. Mm-hmm.
So it's a good way to get more people involved in your stock. Well, companies do this all the time. But and there's a little bit of dilution here because they're issuing some new shares as well, but it's only like 1-point-something% dilution, so it's not really a big deal. But I think part of the reason why they're doing this is because their stock is worth $4.5 trillion. So they're basically selling very expensive stock. And let me see what, give me a second. Yeah, and their PE ratio is it's pretty normal. It's like 27 or 28 times.
Mm-hmm.
So it's not crazy. It's like 100 times.
Mm-hmm.
But it's probably the case that instead of buying back stock, they can sell stock at this price. They're happy to do it. And because it's not that dilutive. The market didn't like it that much. The market probably went down like 1% on this, but probably only because there was dilution of 1%.
Yeah.
But the more important part about this to me is not like why they would raise money publicly, although because they're throwing off so much cash. Like they could have just done this with cash.
Or cash, yeah.
But they wanted to borrow some money, again, because interest rates aren't that high right now.
Mm-hmm.
So they can borrow money cheaply, add it into their existing debt. Who knows what their debt mix is? But the CFO probably made the decision that said, in the context of the debt that we already have outstanding and the overall interest that we're paying on our debt, issuing now, I don't know what the term of this debt is not that bad on a consolidated basis. Then that means that we're happy to just borrow some more money.
Okay.
And that's okay. But the more important question to me is, what does it say about the scale? What's the right way to say this? About just like the pure amount of AI demand that Alphabet is seeing. We don't spend a lot of time talking about it. Sorry, go ahead.
Yeah, no, you're right. It's absolutely crazy. And you're right. We don't spend a lot of time talking about it. They don't make the headline often, right? Like Alphabet slash Google or the entire Google ecosystem when it comes to AI. But when you look at the usage of AI inside Alphabet, like as we spoke about it, like the last few days, actually, I think we spoke a lot about that. Like all the Gemini summary that we let into Google search are actually usage of Google's Gemini, right? So Google
Yeah.
AI.
Yep.
So if you look at how many people are using Google's Gemini, it's actually huge. It's not through a chat interface. It's not through token
No.
sale, right? But it's through another channel, right? Something that's already owned by Google, which is search, right? So it's true that when you look at things from a different angle, yeah, like actually maybe we don't realize how big the demand is for Gemini and for Alphabet's products, just because they do something different, right? Like they don't do the same as everybody else.
But also because, and again, let's just go back to Anthropic and OpenAI to talk
Yeah.
about these two businesses, right? So OpenAI's revenue, what did they say, was 30 something billion dollars, and Anthropic was now on pace, annualizing $47 billion
Yeah.
after $30 billion in April. So it's growing really fast, right?
Yeah.
But the point is, their revenue a year ago was zero. So they're rapidly going up the revenue growth line. But the reality is that once they hit like $100 billion of revenue or $118 billion of revenue, what did we say Google's revenue was in the first quarter? Like $100 billion? Q1 2026 revenue of $110 billion. Q1.
It's huge.
So they're
Huge.
annualizing
Yeah.
let's say 9.3 times higher than Anthropic. So the point is, like, this is the reason why we don't talk about how much money their AI business is generating, because at some level, it's hard to parse out exactly what that means when if your search results on your Google tab or whatever it is are actually being driven by Gemini,
Yeah.
but the ad business is increasing, which is where all the revenue comes from. And Gemini itself, its usage is free for the general public. It's harder to have a conversation around the extreme growth in Google's AI business
Yeah.
because it pushes into their ad business at some level, right? Because the more people use Gemini, the more people get comfortable with Gemini's results, the higher value those ads are they're going to be around it, if that makes sense.
And
Sorry.
when you think about it, like this is an interesting moment as well for Alphabet slash Google, because nobody threatened them on the search, right? Like they have monopoly,
Nobody.
right? Like they have like a massive monopoly.
Yeah, massive.
Like when it comes to search, like they have like over 90% of market share, and when it comes to the money made on ads through search, I think it's like close to 100%. I have no idea who would pay for another ads on another search
Why
engine,
would you
right?
do it? Yeah.
But so which means like even though they have a monopoly, they have almost all the market shares, they are still the one who must spend tons of money on compute to give Gemini for free to everybody. Like they didn't have to do it. They don't have to do it, right? Like because once again, nobody threatens them there, and it's not like they have a competition, but still they spend ton of money to give Gemini for free to everyone through search. So in a way, that's a really, really interesting moment where why do they do that? Why do they feel like they have to? Do they think that, I don't know, they want to make sure that nobody else is doing it, or they want to be even bigger, or they believe that search is going to change and so they want to be there? I really wonder, like, what's the vision and why do they innovate at such a massive cost when nobody threatens them? I really wonder. We should ask them directly.
So one of the other things is that they've been working on their AI stuff for
Forever.
This is not new for them, right?
Yeah. And so maybe like they had actually that's an interesting point, because they have been working on AI since a very, very long time, right? So even though they were not the first to market an AI solution, and when they launched Gemini at first, it was not good, but maybe they already knew what was like a lot of the use cases where they could deploy AI, because they had way more time to to think
To
about it,
test it.
right?
Plus, they have their own
And to test
robust
it.
business. They could test it
Yes,
inside their own business. Like
yes,
OpenAI can't test it anywhere because they don't have another business.
yes. They didn't have any over business, but like if Google have been working on that for like maybe 10, 15, 20 years, then they have a lot of time to think about, okay, we are going to deploy AI there, we are going to try that, we are going to test this thing, right? So as soon as the AI movement is starting, sure, they are not first to the party, but they are really much more ready when it comes to deploying AI into somewhere else, right? Because once again, they have been making a plan since 20 years.
Right. The other thing to note, Martin, is that Google has always been ready
Yeah,
to give away its products for free
yeah,
to non-enterprise customers because the enterprise customers then will subsidize it. So this is Google Sheets, Google, Pages. I can't remember what it's called, right? So we pay for it because we have an
Cloud
enterprise.
Workspace. Yeah,
So we pay for Workspace, right? Because so we have a business account with them, and that's fine.
yeah,
But for every business account, there's probably 5 personal accounts, not for us, that don't pay anything, but we subsidize at some level, which is fine. But the other thing is, Google Mail is free. Google Maps is free for us. It's not free for companies that want to use it, that use it to run their businesses. But Google gives away all this stuff for free because at the end of the day, what are they getting in return? They're getting so much data that for them it's worth it. So we talked about this a little bit last night, but I don't think we can get away. I don't think we can get away from this. One of the reasons why I wanted to talk about this explicitly was because the revenue that they generate from Gemini is different than the revenue that gets generated from ChatGPT and its subscription business, and Claude from its subscription business as well. That's the only business they have, and this has always been Google's edge: is that they don't need to make revenue from Gemini per se, not directly, right? Is again, if it increases the use of Google search, well, then the ad rates can go up, or just more people will stay there. And since you're right, they already have 89 to 90% of the ad business globally across all devices. They need to protect that business at some level because search is not going to go away.
Nope.
Right? So that's also really interesting too. Apparently as well, and it's not clear to me which product this is, but 8.5 million developers are using Google's models monthly, and they're getting like 19 billion tokens per minute through first-party APIs.
But yeah. I mean, like
So
they
it's
have the
huge.
Gemini. Yeah, so they have the Gemini suite of LLM, right? Like of model that you can use. When I tried, like the models for our own use cases, so because we have a subscription to Gemini, I tried to connect it and I tried to use the models, and it was not good enough for coding, like for building the apps and for doing like all the heavy stuff that we do. But I remember the Gemini Flash model was really fine for a lot of small use cases. For example,
What's the Flash model? What does that mean?
So like like in the libraries, let's say, of models that they have like on for example on Anthropic, they have Claude Opus, Claude Sonnet, and Claude IQ, and so they both have different thinking level, different pricing as well, right?
Got it.
And also different speed, right? So for example, Opus is going to be much less fast than IQ, but it can perform much deeper tasks, and it's also going to be more expensive. So Flash would be the entry, the entry level. So that would be the equivalent of IQ for Anthropic. And then I think they had Gemini Pro and maybe Gemini Super Pro or something like that. I don't remember exactly what was the name, but it was pretty much the same idea of like having quick and cheap models and more and stronger models, but the strongest were not as good as GPT 5.5 or Claude Opus, so that's why we didn't use Gemini only, but it was good. It was not bad, right? It was like good. It was okay-ish, right? And
so there's actually a question in chat, Martin, about is that you? No, that's you.
That's me. I asked the question. Are you using Gemini?
You did ask the question. Okay, fair enough. Yeah, I'd like to see if they're using Gemini. It's a good question, though, right?
Yes. Because I really wonder, like, to your point, that there is like 8 million developers who use that. Okay, what are the use cases? What are they doing with Gemini, because there is like maybe like, for example, search, maybe research, maybe like this type of stuff. Maybe Gemini is really, really, really good at that, right? I still think in terms of user experience, it's really hard to implement a multi LLM, like multi provider type of infrastructure. I don't think every enterprise or every SMEs is really able to like, like take a subscription everywhere and then decide, okay, this Gemini model is better for this use case, this Opus model is better for this use case. It starts to be complicated and then really hard to maintain. Plus, because everything changes every 3 months, like what do? You just run all the tests again. Like it feels to me like very inefficient to have multiple providers. But maybe that's what a lot of people do, right? So I would be very curious to see in the chat or in the comments what is your use case with Gemini, what you think about it besides search, right? Because I think everybody use it in search, obviously, because we can't turn it off. It's just impossible. We are forced.
Though, right?
No, we can't turn it off. But besides that, what are the use cases of Gemini? I would be very curious.
So here's the other thing that I think is interesting, Martin, is that because OpenAI's only sort of mass market product is ChatGPT.
Yeah.
When you're using ChatGPT, either as an app on your phone, which I do sometimes, or as the sort of website on your desktop, it feels like an app that's separate to me. I don't know what it feels like to you, but when I use Gemini, I feel like it's part of Google search as well. Do you know what I mean? It doesn't feel like a separate thing. And I know that, look, I can go to gemini.google.com. I got it.
Yes.
Okay, so I know I can do that too, but I just feel like the way that they've integrated Gemini into their, because OpenAI can't integrate ChatGPT into their other products because they don't have other products.
Exactly.
Per se, right? They have pro and different levels and stuff like that, but their product is, and it's the same thing with Anthropic. Sure, Claude Code is different, but it's still part of the LLM infrastructure, and it feels different to me when I use Gemini. And also, I feel like when I'm giving Gemini stuff to do, that I'm also giving it data that I don't necessarily feel the same way when I do the same thing for ChatGPT or with Anthropic. Does that make sense? Because I know that Google has this massive data gathering infrastructure that they use then to serve ads on both a contextual and a relevance basis, right? To people that just go and search without thinking that Gemini is there. Does that make sense? And then the hard part, just one more thing, and then I'll let you go. Then the hard part for me is also, because I want to do some comparison in a moment between their investment into this capital stuff and also some of the other hyperscalers. But the other thing is, it's not clear to me how you break out what their revenue is associated with it. You can just go to the cloud stuff and say that like the increase in cloud usage is related to the increase in AI usage, but I don't think it's one for one. And their cloud business grew 63% last year.
It's huge.
That's insane. Sorry, I interrupted you. You were going to say something.
No, but also, I think something that we need to add to this story is that Google invested a lot of money into both Anthropic and OpenAI, right? So this is why I really believe that either Google, Microsoft, AWS, or Facebook, Meta are going to be the big winner in 5 to 10 years because they are everywhere, right? And whoever wins, they are going to win as well, right? Look, for example here, if Alphabet invests a lot of money into building data centers, who are going to rent the data centers? Anthropic and OpenAI, right? So which means like if Gemini works or Anthropic works or OpenAI works, in a way they don't care, right? Like the only thing they need is people to use AI, whatever AI is, right? Because once again, they do both the model and the infrastructure as well, and the growth that we see in Google Cloud actually proves that as well, right? Like because they have growth in both the model parts. Once again, the model includes Gemini, but also Anthropic and OpenAI. They don't only do Gemini, and also the growth in the cloud infrastructure that they have and that they sell. And so once again, they can win in both situations, right? So right now, if you're Google, if you're Microsoft, if you are AWS, if you are Facebook, who also do both the models and the infrastructure, you just want to build massive data centers. That's the only thing that you have to do right now, right? Like just, let the AI team work on Gemini, that's great. Try to do something there, right? But you
Try.
are not dependent on the success of Gemini itself, right? Like you are, if you build an amazing cloud infrastructure, you can still make a lot of money with Anthropic, with OpenAI, or with whoever else who is going to rent your cloud in infrastructure. And this is such a massive uh, advantage on top of the huge distribution and user base that they already have.
Right. So we should be clear about the amount of money that Google actually has invested in both Anthropic and OpenAI. And
Okay.
I just double checked it.
Okay. Go ahead.
So I think we need to correct something.
Okay.
Let me just run through. This is according to Gemini. Okay. So it's according to Google itself. I just asked them because I'm always testing this. Like, how much money did Google invest in Anthropic and or OpenAI? So Google has made a massive multi-billion-dollar investment into Anthropic, right? They originally invested $300 million back in 2022.
Okay.
With an additional $2 billion in 2023. And then they finalized a massive expansion, committing up to $40 billion more to Anthropic. $10 billion delivered in upfront money at a 350 valuation, so in like one of their previous rounds, and $30 billion structured as conditional financing, just contingent upon whether Anthropic meets like certain KPIs or hits certain performance milestones. And according to Google's Gemini, Google has invested $0 in OpenAI.
Oh, $0. Okay.
$0. Yeah. Again, this is according to Google's own Gemini. So I'm just using what I see there. But the point is that they are very tightly tied on the model side to Anthropic, and almost as interesting, just based on the conversation you were just having, or the stuff you were just saying, is Google also layered a massive 5 gigawatt computing capacity agreement spanning 5 years, guaranteeing Anthropic like foundational access to Google's specialized TPUs, their tensor processing units, and architecture for training for future models. So there's a really tight, I wouldn't say integration per se, but there's a tight relationship between Google and Anthropic, not just on a money side, but also on the data center side, which is what you were just talking about, right?
Yep. So yeah, so my mistake, they didn't invest into OpenAI, but yeah, they can still win like the
yeah. I think the point you were making is still the same.
Yeah, that's still work. We can still win with Anthropic, right? We can still win with Gemini, so we can still win on the model side and also on the compute side, right? So that's really what I wanted to
And I think the point is well made. But here's the other thing: is I don't think it matters so much to Google, but because they've been investing at scale in their AI business for the last, like, I would say 15 years.
Yes.
And that could be in the middle. It could be 20, but it's at least 15. Without having any idea what the ROI on that was going to be. I'm sure in bits and pieces they rolled out or they integrated some of the Gemini stuff or some of the stuff that they were learning into their search algorithms and other things that they were doing. And maybe they were even writing code without telling people, in the same way that Codex and Claude Opus 4. Whatever is doing. But the point is they have not been making money on this for a decade and a half anyway. Yeah. And I feel like I almost want to be on record as saying this, is that, like, I don't think the frontier model companies are going to be the place where the value is taken out of the value chain. Not going forward, because I think there are going to be other services around it. And I think this is the conversation we're having with one of our guests last night, or was that one of the guests on ATP? I can't remember, but I think it was one of the guests last night. And he was like, look, the way this is going to get built out is just like Linux, with the services that the model stuff is going to be there for free or close to zero. And the services that get built around it, whether it's agentic services or payments or anything else that happens that uses the LLM, that's where the money's going to get made. And I think that's, again, one of the reasons why you see OpenAI branching out into robotics. Anyway, what do you think?
No, it's highly possible. It's highly possible, and maybe that's why. I mean, yeah, we've discussed that a lot already, right? Of like how much competition there is and how much different solutions are being built right now on the model side, right? And so many different routes, I feel, are being tested and people are building different things, right? So it's really hard to say, okay, in 5 years for sure, Anthropic and OpenAI are going to make tons of money. They are going to be the number one AI companies. I think it's almost impossible to say as of now, and that's why I think these big companies like Google, they diversify a lot to try
Mm-mm.
to see, okay, in 5 to 10 years, because we don't know as of today what services, what product is going to make the most money. Let's just try to be everywhere, and then we'll see what works best, basically.
Yeah, it's interesting, right? Because investing in the model side of Anthropic by Google is almost like investing against its own research and development for its own
Yeah.
internal models, right? Against Gemini. But again, let's just do some some back of the napkin sort of calculations and sort of analysis here.
Mm.
Google also licensed Gemini to Apple
Yeah.
to use inside of Siri along with some of the other frontier lab models, right, as well.
Yeah.
But they're going to get paid a ton of money for that. So that's the first thing. So while they're not maybe themselves making money for Gemini usage on their own platform, they're making it on Apple's platform, first of all. And second of all, maybe again, if they really believe that the research that Anthropic has done is just better than what they've done, there's no reason why they invested at a very low valuation and they invested a lot of money at a low valuation, right? They were one of the first investors in back in 2022 when the company was first started. And they apparently had like a 10%, 10% equity stage. They've probably been diluted a little bit, but even if it's 8% of $1 trillion, it's still, what is that? $8 billion,
80 billion. 80 billion.
right?
If it's
$80
8%
billion.
of
Sorry.
1 trillion, yeah.
It's a material amount of money. Anyway, let's just do a little comparison here, if you don't mind. This is going to take a little bit of time, but I think it's important to put this stuff into context. So everybody else that's in all the other hyperscalers that are investing in similar capacity as Google, let's just run through some of their stuff. So Microsoft reported $31.9 billion of CapEx in its third quarter of 2026. So in a quarter, it doesn't really matter which quarter it was, but that's their most recent quarter. And with roughly 2/3 of that going to GPUs and CPUs.
Okay.
Okay. And Amazon reported revenue of 37.6 billion up, and their cash flow fell a little bit lower, but they're also investing in Trainium and like all this kind of stuff that they're also investing in. And Meta guided up to 150. We talked about this, 115 to 135. It's actually higher than that, I believe, 135 to 145 billion dollars of capex, driven mostly by investment to support superintelligence labs and the core business there. Okay, and the biggest difference here, Martin, and I think this is one of the things that you were pointing out, is that Alphabet, and I as well, is that Alphabet's business is very different. They have search, they have YouTube, they have Android, they have cloud, they have Gemini, they have developer API, they have all this kind of stuff that OpenAI and Anthropic don't have, and probably never, like Anthropic's never going to have its own YouTube business.
Yeah, no. It's no way.
But it's weird to think about it, right? Like we can laugh it off, or we can just go, yeah, but that YouTube business, which is very profitable, can subsidize some of Alphabet's investment into
Exactly.
more AI infrastructure.
Yeah.
Whereas Anthropic and OpenAI as well, they don't have another business that's generating billions of dollars of revenue that can subsidize their investment, which is why they have to continually go out to the market to raise literally hundreds of billions of dollars at $1 trillion valuation.
Yes. Yep. So that's why I think that the position in which, Google, Microsoft, Facebook, and Amazon is a really strong position. A really, really, really strong position. So, yeah, let's see how it plays out. But I think, let's see how it plays out. But I don't see how they can lose like in the next 5 to 10 years.
I don't think so either. And can I make another point about this? Because I think it's actually super interesting, right?
Yeah.
Do you remember when ChatGPT first came out? A lot of the stuff you would see, a lot of the posts like on LinkedIn and even on X, you would see people going like, well, that's the end of search because I just use ChatGPT for search instead.
I think that's all gone.
Right. but we can say it's all gone, or we can actually give data.
Okay. Tell me. That's interesting.
Search revenue at Google.
Yeah.
Okay. So first of all, like, the reason why I want to put this into context is like, how can you judge whether the money that Google's actually investing or raising or whatever in their AI infrastructure is actually working? Right? Because like they can throw a lot of money at this, but like, does it make a material difference to the business that they're doing? Because they have other business. Well, let's say, yeah, it does.
Okay.
The first thing, we talked about this earlier, but again, let's just put everything in order, is their cloud backlog. They have $460 billion of cloud backlog.
Yeah, that's massive.
Okay, so it doesn't mean that they're necessarily going to get all of that business, because they're going to have to build out the cloud stuff. That infrastructure actually costs money too. As long as their margins can stay the same, that's going to be additive. But the second is this idea that like everybody was just going to use ChatGPT for search. I still go to Google.
For sure.
There are certain things, Martin, that I use ChatGPT for search, and only if I'm in it. You know what I mean? Like it would be weird for me to not be using ChatGPT and then go there to start a new search. Does that make sense?
Okay, yeah, makes sense.
You know what I mean, right? I'm not sure if you do the same thing in Anthropic, but I almost never bring it up if I think I want to search for something. I just go into the URL bar.
Mm-hmm.
And now that I know, here's the other thing too, Martin. Tell me if your behavior here has changed. I go to the URL bar and I think, oh, wait a second. I'm not asking Google search. I'm asking Gemini. And if I'm asking Gemini, then I have to treat this more like a prompt than a search request.
I do that all the time. And I think that has been one of the largest behavioral change that I've seen in myself, basically in the last maybe 2 years, right? Like since ChatGPT.
Interesting, though, right?
Yes. Yeah. Now, thanks to Gemini, that I go to Google to use Gemini purposefully, right? And now I tend to have an idea of the type of prompt that's going to end up in a result from Gemini, and not just search results, right? And sometimes when I just prompt something into Google to expect an answer from Gemini, and I don't get it, then I feel like it means Gemini could not figure out what was the answer. So which means, why bother going to the website and try to figure it myself? If there is nothing from Gemini, it means that the answer is not obvious, is not simple. So it means I would need to think about it. I don't think my query was that important, basically, right? And so I think my behavior has totally changed. Like my search bar, my Google search bar, is definitely a prompt for Gemini, not a back and forth. It's not a chat. It's just a question answer type of thing where I expect something from the AI, and if I don't get it, it's really, really, really rare that I would click on a website. Actually, really rare.
Do you change? So again, I said to you that the second is that research has been way more resilient than people had expected. But revenue growth, the proof is in the pudding, right? And revenue growth for Google search is up 19% in quarter one for 2026.
Yeah, crazy.
19%, not 4%. You know what I mean? Not 3%. 19%.
It's huge. It's huge. And so what has been the growth since 2022? It must be insane. It must be insane,
right?
Yeah. So let us know as well in the chat, like if you see the same thing, if you see the same change in behavior in your
behavior.
Yeah, in your own behavior of using Google. Do you expect the result from Gemini, or do you take it as a bonus, or do you still go to website to try to figure it out by yourself? I really wonder.
I want to know too, right? Because I want to understand, is my behavior common or is it unique? And I don't think it's that unique, but I'd love to have it corroborated by other people. And the other thing I want to know too, Martin, is even when I'm using Gemini, right? When I'm embedded into the URL bar, which I don't even know what you call it anymore because it's got so many different uses, but that's where people type in the URLs, and that's where you can see the URLs. So that's what I'm going to call it for now, until somebody tells me to call it something different. But I also change personas. Do you do that as well?
What do you mean by personas?
Well, like, who's going to be better at knowing a certain topic or the information around a certain vertical? Is it going to be sort of a generalist person that's using not the MOE, but the entire model? Or is it going to be like the senior partner or the senior analyst at McKinsey who covers technology, media, and I can't remember what the other T stands for. Or the AI analyst, they're going to know more about the AI business, or the data analyst or the data center analyst is going to know more. So I just tell the chat, your persona is the global senior head of data analytics, and data centers at McKinsey. You know everything about this more than anybody else because you've done all the research. Then it says, okay, here's who I am. And then you give it a question about the data centers, and then it just digs deeper than it would if you just ask the AI the question directly.
So you do that in ChatGPT, right?
Every day.
Yeah. So I don't think you can do that in Gemini search directly because it's more like search type of things, right?
But you can do it in their app. You can do it in their app. You
Yeah,
can
yeah,
change
yeah,
the persona because I've done that as well.
Yes, you can do that directly into the app. Yeah.
But do you do that? And I wonder if people in the chat do that as well.
No,
I'm super curious.
I don't do that at all. For me, what I'm doing is a very simple prompt. Just do this thing. That's it. And then I made sure that, because like actually my usage of AI is really different than yours, I would say, because
For sure. Yeah,
I
for sure.
almost never use chats, right? Except if it's for coding something and I need to think about it and iterate with the AI itself because I'm not sure about what I need, right? Otherwise, 95% of my usage of AI right now is just AI agents that loop through all the stuff that I've built because they need to do stuff for us, right?
Mm-hmm.
So that's more like the way that I build the AI agents because they just work 24/7. And then when I need to code something, I'm not creating personas the same way you do, like you are an expert in this and stuff like that. It's more like I create the agents and I give them the proper context to actually know where to find the data they need to do their work. So that's the same idea, but that's the same intent, right? Of trying to change the behavior of the AI by giving
just
them
make it
more
more
context.
specific, yeah.
Or by making them more specific. And what I find myself is that it works much better if the prompts are actually much shorter, and if you can give them like concrete data rather than vague input. So that's why I don't use that. Instead, I give them the data directly or the way to access the data.
Yeah, and here's the thing: the stuff that you're trying to accomplish with Claude is very different than what I'm trying to accomplish with ChatGPT, which is why our usage is different. But they rhyme with each other in the sense that like you're giving your agentic AI context so it knows where to go to get stuff.
For sure.
And I'm giving my not agentic AI a persona. So it knows the context within which it's supposed to think about a certain topic and not have it be so general, but be very specific about, look, I want you to think about this like the analyst at McKinsey because I want to learn what they would learn and to know what they would know or think about it the way they would think about it so that I can do my job better. And I found it to be very, very effective, actually.
Yep. No, so yeah, definitely that's definitely the same end goal, right? Like to actually use the AI the same way, a different way for each query. And once again, we need to do all of these things because we cannot fine-tune the models or we cannot build our own models to actually exactly do that from the get-go, right? We need to add this extra data layer, right, to actually tell them like, look, this is what you should do, and we need to tell that all the time. We need to repeat this all the time, right? Which is so annoying and so inefficient that burns so much token to repeat the same thing constantly, but and at the end of the day that costs money because we need to pay for the tokens.
Exactly.
But yeah, so that's why like once again we are just in AI v1, right? In AI v2 I think we get to stop doing this type of thing because it's once again super inefficient, and we need to be able to actually put this information directly into the AI itself, and that's going to be much better.
Yeah, exactly. Okay. I think that's enough on that topic for now. I want to talk as well about this pre-ChatGPT startups and the reckoning that they're facing. I want you to think about this too. And again, let me do my thing where I just give some details. Yeah.
Let's go.
And I feel like this manifests itself, Martin, in a lot of the conversations that you and I have, where I'll be looking at, hey, what should we talk about tonight on AGTP? What should I talk about on ATP? And you know, one of the things that I used to focus on a lot, and we did as well as a team, was like, what are startups doing? How much money are they raising? We don't want to do it in this way of like, because I hate this terminology, like this team bagged this amount of, like, I hate it. Let's be adults about this. But in the old days, if somebody did a Series A and it was like $87.5 million, you would just sit down and be like, that's a ton of money.
That's big.
Yeah. What are they going to do with all that money? And then what's the follow-on investment going to be?
Yeah.
But what's happened, I think, is there's been just a really weird revaluation almost like a reset for startups that raised money, even large rounds, before ChatGPT was released. And I can never get this date right. Was it 2022 or 20? It's 2022, yeah?
In November 2022, yes.
In November 22. So the whole idea here is that the venture capital money has not disappeared. It's just become, and we know this, right? Because we've talked about it. If OpenAI is raising $122 billion and Anthropic in the same period of time is raising, what did they say, 65?
Something like that, yeah.
Something like that. It's almost $200 billion. So the money is there. But none of that money is going to like the SaaS company, and we'll get to some of the details here, that raised $87.5 million Series A, because they're just like, my upside is way bigger, and it's a transformational investment for me to put that money into either Anthropic or OpenAI. Again, as a proxy for all of this AI stuff.
Yeah.
But the crappy thing for all these companies is it looked like they were going to grow and then get follow-on capital back in 2020 and 2022. And now those companies are just sitting there on the sidelines going like, our valuation hasn't changed in years. Our business isn't growing. And it's harder to get follow-on financing, even if our business is a good one.
I mean, are you sure the business is a good one? That would be the first question I would ask them. Like, do we actually need you? What's your moat, right? Like,
So
because
that was purposely said that
Yeah,
way because I wanted you to
exactly.
respond in that way.
Mhm,
I
mhm.
agree. But the point is that before ChatGPT, even in its formation in 2022 was released, people thought that these were useful businesses that that could raise a lot of money. But and again, to me, Martin, the question is never like what's already happened. We talk about this all the time, right? It's like, what's the second order impact of this? Right? It's not just that these companies now have lower valuations. That would be fine if they were still operating.
Yeah.
Right. And again, based on my research, the largest affected category is SaaS. Okay. Some of these companies were unicorns. I turn my head. Let's just stop. Some of these companies had valuations of over $1 billion, which again sounds like a small number today, doesn't it? Is it just me, or does that sound like a small number to you? You're laughing, but
In
like,
the context of AI, yeah, like everybody is $1 billion company as of today.
right? So it's like, and you know what a unicorn is, right? You know what the actual thing is, a unicorn doesn't exist. And
Yes.
even if it does, it's like a horse with a horn on. Like it's a weird thing. But if every $1 billion company is a unicorn, then it's by definition it's not a unicorn. That's a conversation for a different time. But the point is that it's not just a lower valuation. Okay, that's fine in a way. It's a change to me in like what is venture capital actually looking for? Right? So before you'd look at a SaaS company and it would just be seat based. Like how many people do I think are actually going to use this? And then you can do some math around what a monthly subscription is, so what a yearly subscription costs, and then what your yearly expected annual revenue is going to be.
Yes.
But that doesn't seem to work anymore. And again, we know from our own experience that you can take a SaaS company that has a product that's like 80% good. And as long as there's no moat around it, which I would argue most of them don't have a moat. The big ones do. Like no one's going to rewrite Salesforce. It's not going to happen.
No, it's too
Say
hard.
whatever you want, but like, and it's too hard, but also it's too entrenched. It's too integrated. Plus, who's going to write all the APIs for that new thing that you're writing? You know what I mean? Like if you're going to do that, you're also going to write new APIs for every function that's in there and to compete with them. I just don't think it's going to happen.
Yes. But most of the SaaS businesses are not as strong and do not have a moat like Salesforce has, right?
That's the point. That's the point I'm making. So, yeah.
Yeah, and this is exactly why right now the SaaS that are not that useful, I would say, right? Like they are just a wrapper around something else. They are just a nice UI. They don't have proprietary data. They are not doing anything unique, or they don't have anything special or stuff like that you can't replicate. If there is no moat around what they do, then you can just rebuild them in a couple of hours as of now, right? Like I don't know, I stopped counting the numbers of SaaS that we have rebuilt ourselves, really. And most of the time it's just a very simple prompt in the cloud, right? Like, hey, look, I want to rebuild something exactly Calendly, for example, and that's it. You just say that. You don't need to say more than that. You just say that to Claude, and really, like in 10, 15 minutes, you have something that works, and then 2 hours after, you have something that's perfect. Because you just need to iterate, fix that, change this, improve this thing, add your like couple of ideas, just customize it to exactly what you like, and that takes 2 or 3 hours, right, to get to a point where everything works. And this is just so simple right now, right? First of all, that's very simple. Say to novel, that's free, and third of all, it's fully integrated with your other suite of tools that you use. And for us, this is the
Right.
this is the most important. When you can connect Calendly of your own solution to your CRM, to your social media flow, to all of your other processes, and
Yeah.
plus you can add the 2 or 3 features that you have always dreamed of into Calendly and that they are never going to do for you. Now it makes a lot of sense to spend the 3 hours to actually build it, right? And so that was the
Yeah.
starting point for me. I did not care about spending $10 a month in Calendly. That was fine. It was not a money problem at all. But
No.
there was a one feature that I really wanted and that they will never build for me. So I was like, okay, this feature is really important for me. It's worth it spending the 3 hours to actually build it. And now that I have it, I'm always super happy to add new feature, new customization, right? And that's the case for almost every software that we have rebuilt. And I can't remember anyone taking me more than one afternoon. I even built one. I remember I didn't know how to use it. I sent to Claude basically the demo video of like what you get after you sign up, and I say, here is what I want to do. It looks cool. Please build that, and that's it.
That's hilarious.
I didn't even try the software. I was not even sure what it was doing. I had like a vague idea of what was the output, what was the goal.
Would you just the prompt was just like, do what these guys are doing, get back to me later?
Yeah, I was like, this is the training video of how to use the software. This is what I want to achieve. Just
it's so good.
That's it. And when you think about it, like, and then Claude actually got the transcript from the video, understood what was the goal and what I wanted to achieve, and then built me exactly that in just a couple of hours. So once again, it's so simple, right? It's so simple to actually do it, even on software that you don't use yourself. I mean, you really need today, if you build a SaaS, you really need to have proprietary data. You really need to have custom integration into something super complicated. You really need to do something more than just like a couple lines of code that just do something. You need way more than that as of today. For sure.
You need to have some defensible IP as well. Like you need to have some intellectual property that says like what I'm doing is different than what you're doing.
Yeah.
The math that I'm doing is different, and I'm iterating all the time. So it's not like I have this static product. I have this dynamic product, and that dynamism is based on what I know, not what you guys know, and my very proprietary way of analyzing this thing, that thing, and the other thing. And you can't replicate my dynamism because you don't know what I'm going to do next, right? And what ends up happening is, at least from an investor standpoint and from a valuation standpoint, it's created like this two-tiered market as well, right? So for SaaS companies, big or small, that have the stuff we were just talking about, it has intellectual property, it has unique data, it's solving a unique problem. It's not just a wrapper around some kind of open source thing, which we see a lot of, right? But if that's the case, then these AI native companies or a SaaS company that somehow can build like a reasonable facsimile of an AI business around that business are going to get all of the growth. And here's what's interesting too, Martin. Carta, a company we know well, we know their team in this region. Their end of year 2025 private market review, which they probably do in the first quarter of 2026, said total round count, so that just the number of rounds that were funded, fell to a 6-year low.
Oh yeah. Oh wow. Okay.
Okay. And AI captured a disproportionate share of later stage capital. Because can you imagine if you're out there going, should I invest in this seat-based, non-proprietary SaaS company for their E round or their D round? Or should I invest in like the Series E round for Anthropic at a $350 billion valuation when a month later it's going to be worth $1 trillion.
For sure. I mean, for sure. Like, I think that the number of company funded is going down for sure, but the total amount of money invested is going super, super, super higher. I think this is
It's not
growing like
even
crazy.
close. Yeah,
I think
it's
this
not
is
even
just
close.
yeah, it's absolutely like crazy in terms of growth, and that exactly shows what you just said, right? Like, what do you want to do? Do you want to fund like SpaceX AI to create like new data centers? Do you want to fund Start Cloud, who may be building data centers in space, and then getting so much compute? Or do you want to fund a wrapper around ChatGPT that can do everything for you, right? Like, I think
Right.
I think the answer as of today is so obvious, right? Of like where are actually the needs. It's in compute, it's in data centers, and then if you want to take more risk, you can go to the models themselves. But if you find somebody who's doing AI infrastructure, right, and not AI solutions, it's way better. And so I think that's why we see like so much investment into this and much less into the AI product themselves, because once again, if there is no modes, if it's something that Anthropic, OpenAI, or any user can build in just a couple of hours, that's not gonna be good for your money for sure.
Yeah. What's the point, really?
What's the point? But still, like we still see, Michael, like companies that get funded as of today, right? I think it's crazy. Like sometimes we see startups being funded, and I don't want to give name because I don't want to be mean to it to
I know. I feel the
anyone.
same thing. I saw a couple of stories today where I was looking around, and I don't want to say in which region, but I was like,
Exactly.
you just
But I'm
raised
like,
$14.5 million. It's kind of quaint. Do you know what I mean?
but also I'm like, they're
It's like you're
business.
making your own cookies. Like, I don't get it. What are you doing this for? Sorry.
And plus, also, like, I feel like their business, I can just do it my own in a couple of hours, right? Like, so why do we really need to invest into this business? Why this business actually needs to exist, right? I think it's actually a really good question. Like, I think the future of SaaS, if I had to do something in SaaS, if I had to take a bet, it would be much more towards helping people building their own SaaS rather than actually keeping the old model, which is building one SaaS, one offering for everybody, right? Like currently, for example, I would prefer helping people build their own version rather than building one Calendly that is actually accessible for everyone and is the same for everyone. I think we are more like going into that direction, and it's just going to be stronger and stronger, right? Like because the models are getting better and better every day. And so if we can build any SaaS in a couple of hours right now, what about in 2 years? What about in 5 years? Right? So yep, I don't think it's a good idea to be doing just a just a wrapper on something as of today. Or it's a really short term bet, right? Like for example, I remember like a lot of these startups pre-ChatGPT were actually having access to the ChatGPT API before everybody else, so they could build AI solution before ChatGPT actually launched. And so this way, they could actually make some short-term money, grow the company really, really, really fast, and then once ChatGPT launched, boom, crash and die. But if you made enough money in the meantime, maybe that's worth it. Maybe that's some of the bets here, right? Like, okay, we know at some point we are going to die, but maybe we have a 12-month window, right? So that would be the only way to make money, I think. A very short-term bet.
So I want to give you some more information because I think this is kind of awesome, actually. So Jungle Ventures, which is a prominent Singapore-based, but like Southeast Asia investing,
Okay.
also India investing venture capital company, started raising their fund 4
Okay.
between May 2021 and May 2022.
Okay.
So pre-ChatGPT, which was released in November of 2022, right? There is a $600 million fund.
Okay.
They're early stage investors.
Okay.
What the fund are they going to do with that money? It's a 10-year fund. So between the time that they closed the fund, let me just see. Yeah, and this fund was oversubscribed because their performance prior had been pretty good. I don't know off the top of my head what it was. But they closed this on May 18th, 2022, again, according to the Google machine.
Okay.
They must have been feeling really, really good in May of 2022. But in November, what did they do?
Yeah.
Early stage, yeah? Not growth capital.
Yeah.
So can you imagine the companies that they invested in between May and November, and also like from November 22 to November 2023, before anybody understood this. Now they're thinking like,
Mm-hmm.
I don't know how much of that fund is left, but you're right. If you watch the announcements, you can see companies that, again, you and I probably saw some of the same stuff today, but it was like, you just raised $18.5 million.
Yeah.
What, like, you may as well just take yourselves out to dinner and shut the business down, because it's not enough money to compete against what the other companies are doing, and the capital with which they have access to. Yeah.
And also like to add on top of that, but like when we look at what are the best innovation that we have had access to in the last 6 months, for example, in the AI space, everything comes from the large enterprises. For some
Yeah.
reason, as of today, innovation comes from the big players. It doesn't come from the startups at all. Like
At
it's
all,
really,
though, anymore. It's
really
weird, because before that wasn't the
it's really
case,
weird.
right?
Yeah, but I don't think that was the case before. I'm not old enough to remember, because that's like the first like very large tech revolution that I participate in. But there is no new thing, new big thing, new disruption that comes from a startup. There is only massive new product, massive new disruption that comes from actually the incumbent themselves, right? Like for example, Salesforce. They have said, okay, you know what, AI is going to change the world. Great, we are going to change our own business completely, right? Or Stripe, who said, look, now we are going to make all of our business accessible through
Yeah.
agents, right? And it's not startups who are doing that. It's very large companies. Also, like we don't have like a search, right? That's launched with AI summaries on top. It's not a startup who is doing that. It's Google who is doing that, right? So
Right.
all the new things that we use every day on AI are actually built by the massive large enterprises. And I think this is really, really interesting, because it shows that the amount of data, the amount of resources, the amount of distribution, like the basically like everything that they have built over the last 10, 15, 20 years is actually giving them a massive advantage when it comes to deploying new technology, right? And this massive advantage is actually important in the age of AI. It's not like, okay, it's going to slow us down. It's actually the exact opposite. It's actually going to help us to deploy. It's going to help us for adoption. It's going to help us to create new product, better product, and no other companies has that. No one has search as big as Google, so they can't do the Gemini offering. Nobody has like as many merchants as Stripe has, so they can't really do a good solution for agentic search. No one has the type of data that Salesforce has, so they can't launch Slackbots, right?
I was
So
gonna
that's
say,
what like
could you imagine, but not just Slackbot, could you imagine somebody waking up tomorrow and going, this is like, let's say at the beginning of last year, and going, Salesforce, not AI enabled.
Yeah.
Let's just rebuild the
Agent
Salesforce
360.
platform. 360. But external to, let's
Yeah,
say some
yeah.
entrepreneurs like, oh, we could rebuild that and make it AI native and blah, 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 and then expose everything via APIs, which is going to take time, and then also make it MCP compliant and do all this kind of stuff. But then they would have to go out, Martin, and convince every Salesforce client, which are the biggest institutions in the world, which are the most conservative institutions as well, and say, use this instead because it's cheaper,
Yeah.
prettier, because
yeah.
the UI depends, you know what I mean? Because the UI is dynamically developed or dynamically changed based on whether the CEO is using it or some analyst is. Like, I just don't see that happening anymore.
Yeah. No. It's true that in the age of AI, at least, you have very little window, like you have very little possibilities for disruption, right? And also like something to add to that as well is that companies like Salesforce, they have massive operations when it comes to sales, when it comes to customer support, when it comes to customer relationship, and this is really hard and long to build, right? So for example, a company like Cursor, when they launched and they have been able to grow so fast, that's very unique, right? That's very unique, because not only the product needs to be good, but also the marketing, the sales, the customer support, the onboarding. You need to be good at so many different things really, really, really fast if you really want to compete, right? And yeah, besides Cursor, besides like a few of them that had like a very unique value proposition very early, and once again for Cursor, they have had to change their entire product like overnight, right? They were successful, and then they were like, okay, we need to change absolutely everything to be even more successful, or actually to not be disrupted by the cloud code or the codecs. But besides that, there's really little innovation that comes from a startup, which is an interesting time, very interesting time.
It's weird though, because I feel like things have reverted to like the 1960s in the sense
Okay.
that big companies, big conglomerates, big corporations are doing all the innovation.
Mm.
And it's going to take some really wild small company. Because then in the 70s, you had companies like Apple, right?
Yeah.
And companies like Microsoft start. But these companies were built when there was this massive sort of technology transition
Mm.
on the way. Like in retrospect, if you look back at those years, you can see like this almost had to happen.
Okay.
And we can see the same thing in the AI space right now. Like whenever you see a big announcement in the AI space, you're not surprised, are you?
No, 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 no.
You're not at all. You're like, oh, I didn't think about that, but it makes sense now in the context of
Yeah.
everything else that we're seeing, right? You're
Yes,
not
yes, yes,
like,
yes, yes.
oh, I didn't think about it on my own, but it's like, okay, I see the
Yeah.
relationship between this thing, and that makes sense now to invest in that.
Yes, 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 yes. For sure, for sure, for sure. And plus, that most of the big announcements are actually made by large enterprises, right? That if he is a very large player into a vertical, once again, they are doing most of the innovation as of today, which is, yeah, which is very interesting. And I think it's not going to change. Which means also like the model of like building something really quickly that works, that's good, and then being acquired by a big company because you can help them do
Right,
something faster,
right,
right?
right.
It doesn't seem to happen as of now, right? Like all the
No,
acquisition that we've seen
no,
in the last couple of months, like mainly from OpenAI, I mean, they really don't help much their main business, right? Like let's be frank, right? Like they don't really help much what they are doing. Either they shut down the business or they do nothing, right? Like OpenClaw or TBPN, they do absolutely nothing for OpenAI or the finance app that they bought and they just shut it down instantly.
mm,
It's not like it's not like they have built something that's good and then they want access to the team or to the or to the product to follow them in. It doesn't
right.
happen a lot. The only places where we have seen that is on the chip side, right? Like Anthropic buying the company making chips like a couple of weeks ago,
Yep.
stuff like that. That has been the only place where we have seen that, and all of these
Cerebrus as
cheap
well, right?
so Cerebrus as well. But all of these cheap companies are like old companies, I would say. It's not something that have been built in the last 2 years. It's all people that have been working on that for a very long time. So can we say they are startups? Really, not really. I would say, but yeah,
Yeah,
that's
but
a
I guess
very
you have to
interesting
change.
time.
I guess you have to
Mm.
change your definition of what a startup is. So
Mm.
Cerebrus has been around. First of all, it's a public company. It's been
Mm.
around since 2015,
Yeah,
but it hasn't really had a big product out. You know what I mean? So in that
Mm.
sense, it's like still trying to figure shit out. It's still a startup in that sense, but it's not brand new.
yeah, exactly. So yeah, I think it's funny because it's at the same time much easier to build things as of now, but also much harder to build things as of today because the competition is much harder, it's much more intense, and also it's much easier for anyone to build things. So if you
Mhm.
build something, what's your modes, what's your advantage? It needs to be real.
I agree. But clearly, Martin, I think we find ourselves at a massive inflection point. And I
Yeah.
think the behavior that we're seeing, whether it's from an investment standpoint, from what kind of company is getting built standpoint, and
Mm-hmm.
from which companies are actually doing the large scale innovation standpoint, it's clear that we're at some kind of inflection point and that everything, I feel like everything's changing all at
Yeah,
once.
I agree.
And I
I
don't think
agree.
that's too big a statement. I don't think that's hyperbole at all.
No, I think there's a lot of things are changing right now, and I think the biggest change is what is AI V2. We need to wait until we have a better idea to actually have an idea of what does the future of tech look like. Because right now we don't know yet. There
We
is
don't
too
know.
many tests everywhere, right? And that's great. There's a lot of people are working on AI V2, right? What is the next version of AI that's gonna be better than that what we are doing right now? And once this is going to be clearer, right? Like once we will know better, do we do open source model? Do we do local model on the machine? Do we fine tune the build model? Do we do small language models? Like what is it, right? Like what is the next version of AI? Then I think it's going to accelerate so much, because then we will have more clarity of actually, okay, this is the best way to use AI. This is a much better way to use AI, and then we will go to V3 maybe at some point. But at least V2 is like, there's a lot of things changing right now, and I don't know when, but once we will have more clarity on what is V2, everything else is going to change, I think, and up like down to how we work, like just down to how we work, because this is the biggest change I think that we need to be ready for. Is once again just how we work is going to change completely once we embed AI even deeper into what we do.
Yeah. So here's the other thing that we need to talk about a little bit.
Yeah.
And that is that these SaaS companies that got started in 2021 and 2022, and that even were getting funded a bit into 2023, and that are now kind of, I wouldn't say they're zombies, but they're not growing as fast as they expected to, and they're having a hard time raising capital. But they do actually have a product in the market. And it's hard to rebuild a SaaS product that hasn't been built yet, if that makes sense. Do you know what I mean? Because you don't know that. So like if you think about some of the SaaS products that we use, like if there's no Calendly, could we have rebuilt the Calendly functionality if that frame of reference didn't exist? You know what I mean?
So actually, I would say yes. It's just at a different mindset. But like, think yesterday, Michael, about what I've sent you. Like yesterday, I sent you one link. Yes, and I said to you, try that. You remember? And that's like a software that we've built, right? You using Cloud, and the genesis of this software, it's not something that exists. There is no solution like that at all, right? It doesn't exist on the market, so I couldn't say to Claude, just copy this thing, I want to get the same thing. What I said to Claude was, I have this problem, can we solve it with tech? That's it, all right? And then based on just these prompts, just explaining what is my problem, and then asking him to fix it with tech, boom, we got one more software that doesn't exist on the market and that help us do something. So I would say my answer is yes.
Yeah, but can we make the case that that piece of software, which is very good and super useful, was more simplistic than a sophisticated SaaS program could possibly be? Now, if you think about, like, again, I don't want to give away all the stuff that we've built, right? But if you think about some of the other products that we've built, there was a reference to rebuild it.
Yeah.
And it actually had some pretty decent functionality. It did this thing, it did that thing, it did the hashtag, you know what I mean? Like it did all this stuff, which we may have missed if we developed it from scratch without a reference point.
Yes.
So my suggestion here is not that the companies that were built in 2022 were useless, but they found themselves now in a situation where what took them 3 or 4 years to build and all the iterations and stuff like that, even if they have very little traction, now other companies can look at that and go, why would I buy that from you? But again, for a SaaS business that doesn't have any intellectual property, doesn't have any unique data, doesn't have any unique anything. Yeah, but now you look at it and you're like, I was paying $100 a month for that, but now I'm going to get my IT team to rewrite that thing.
And so if the SaaS business, for example, has a $10 million annual recurring revenue, and they hope to exceed for like $50 million, but you can build it in a couple of weeks, right? For a couple of $1,000 in token, then what do you actually buy? Do you actually buy the user base, the distribution, but then it's not that big, right? So do you really want to spend $50 million into buying that? Definitely not, right? So but for sure, like the exit potential of the SaaS, which was for sure the software, but also the distribution that you have built. Nowadays, it's completely crushed, right? Like you're definitely not going to pay the same price as you were paying back in 2020, 2021. Like if you bought a SaaS in 2021, this is sad, right? This is really, really sad, because like in 2022 with ChatGPT, you could probably build something very similar, much faster, right? And as of today, who is going to build a SaaS where you can just build it once again in just a couple of hours?
So I'm gonna make an analogy, which
Okay.
hopefully you'll like, but the
Okay.
audience should love this. So there was a food product called Tokyo Banana.
Okay.
Just work with me on this.
Tokyo banana. It's gonna be funny.
It's a famous souvenir. It's like a famous omiyage, famous souvenir for people that were coming into Japan. They would bring them home to their countries.
Okay.
And in one of the countries that loved this Tokyo banana,
Okay.
the banana company was seeing that like a lot of people in the country were buying them, so they came to that country
Okay.
and then tried to sell like the recipe and the thing to another big company here from distribution. Just think
Okay.
like of a big food company.
Okay.
Now, in this case, the Tokyo banana is a very simple SaaS wrapper around something that has no particular
Mm-hmm.
intellectual property. It's just a sponge cake with cream filling, but again, it's branded Tokyo banana, so it seemed to have some value. But this big food company, which I'm sure you've heard of, just went like, we could make these. And we could make the packaging look just like the Tokyo banana packaging.
Mm-hmm.
And then once they teach us how to make them, we don't need Tokyo banana anymore.
Mm-hmm.
And then boom, they rebuilt that whole business. And now people don't buy Tokyo banana from
Mm-hmm.
that particular country. They just buy the local one because it's cheaper. It's the same thing. And the packaging looks the same. So it's confusing in a way. But
Mm-hmm.
my point is that like once you understand how to build the Tokyo banana, which is in this case the SaaS,
Yeah.
if somebody comes, this is my point is that if somebody comes to your company, you're a big enterprise, you have a decent IT team, and someone goes, we have this amazing SaaS product that's going to help you in this core part of your business do this thing that you can pay us a monthly subscription. You go, how does that work? Can we see the demo? Can we blah, blah, blah? Can we test it for a month? Then you're like, this is their Tokyo banana, right?
Can you
Where now
send me
they
a demo
say,
video? That's all I
hey,
need.
can you send us the demo video? Send Martin the demo video. But the point is that, again, if they have one guy working on it,
Mm-hmm.
it could take, a week to build. But if they have three guys working with like 5 agents using Opus 4.8, they could build it in a day or two. And then
Yeah.
they're like, we got the sales pitch. We agreed that this is valuable, but why don't we just build it ourselves? Because we know how it works because you told us.
Yes, and plus we can customize it to exactly what we need. We can integrate that exactly with our
Exactly.
database and existing software. So it's actually going to be better than what you try to sell to us, right? And every time I
Exactly.
want to add a new feature, I can just add it myself because I built it, and so I don't need you, right? So it's so
But I don't
much
have to
better,
ask you.
right?
Right. So
In
again,
fact, to ask you,
if I wanted to make a Tokyo strawberry as
yeah.
opposed to a Tokyo banana, now I can do that because I don't need your help. It's the
And if
same
you want
thing.
to change the cherry to an apple, like, are you going to go to Banana, ask the customer support, hey guys, I want to change this thing, can you actually do it for me?
Mm-mm.
It's never going to happen. Also, like if there's a problem at Tokyo Banana and the delivery is 3 days late, who are you going to argue with, right? Like there is nothing that you can do. But when your SaaS crash, then you can check and fix it, and then it's done, right? So you are not dependent at all on other people stuff. So I don't know. There's like so many reasons to actually build your own thing, rather
But
than
that's my
just
point.
just
But,
just the money.
but if there's no added value in it,
Yeah, yeah,
and you can understand like how it works, and you've already seen somebody build it, and actually someone's come to sell it to you,
yeah.
then I think the likelihood today, as opposed to back in 2021 and 2022, where building it would take a long time and all this other stuff,
Yeah.
now you can do it in a day or two. You can test the integration. You can test it on the weekends, and then you roll it out on Monday, and everyone just has like a product that looks like the old product that everybody already
Yeah.
knows how to use, but it's customized to your
Yeah.
user base. It's just a way better way to run a business, it seems to me.
It's way better. It's way better. So that's why, like, when you have investors who are still funding this type of businesses, this type of SaaS,
Mm,
I'm really wondering,
mm,
like, what's the end game, right? Because to me, the cost of SaaS is going to just like tank. It's going to be so much cheaper on so many different SaaS. Because once again, the only way that they are going to keep you is if it's really, really, really cheap, and then it's not even worth the struggle to spend 3 hours to build it, right? Like a $1 thing, then maybe you just pay
exactly.
for it. So it needs to be super, super cheap, but also like the entire economics around the exits are
Mm,
completely changing. Why would you buy a SaaS right now if you can just rebuild it in a couple of hours. So distribution is going to be super important, brand is going to be super important, but then it means that you really need to be super strong there, right? Like, because if anyone can replicate it, then it's not worth buying. And yeah, you really need to be to have a mode somewhere else than just the software, for sure.
But also think one more thing, and then maybe we end the show for today, because we've been at this for like almost an hour and a half.
Yeah.
And we can leave the topic, our third topic, which we almost never get to because the other two topics are so important. But that's an ordering problem, not necessarily a topic problem. Give me a second. But the point that I was going to make is, it feels to me like, if it feels to you and me, and we are not venture capitalists, right? But if it feels to us like that the VC market or the investment market for startups is bifurcated in such a way that it's just all AI all the time, and that the rest of the startups, whether they were existed before or starting to get built now, at least in big markets, are just like the evil stepchild or the ugly stepchild of the, of the potential VC investment business. It feels like that stuff, at least in the near term, is going to get worse before it gets better. Because again, just imagine walking into the office of a VC that has a big fund, a multi-billion or $500 billion fund, and you're like, we want to raise $13.5 million to build this thing that fixes a niche thing at a niche thing for the niche guys. Do you know what I mean?
Yeah,
like they just don't have time for it anymore.
Yeah, don't waste my time. I agree.
And if you go to the limited partners of those big funds, if you just want to go and end around and say, okay, we'll do a smaller fund, but you go to an LP, a limited partner, whether it's a big university endowment, or just a really rich guy in Chicago, and go, I have this amazing idea to invest in these types of companies that everybody's ignoring right now, and we can make a ton of money. And the first question you're going to get from them is, what's the AI angle? Because they don't want to be left out of it at a cocktail party. And we could laugh at that, but the idea is, imagine them going to a fancy cocktail party, right, between like Harvard, which has a big endowment, Princeton, which has a big endowment, or whatever. And the guys who run these endowments go, I just invested in Anthropic, and you guys invested in OpenAI, and that guy invested in Bob's little startup company. It's like, just not going to happen anymore. At least not soon.
It's not doing. No, I agree. It's going to get much, much worse until it gets better. Maybe until we know better about what AI can do actually outside of coding and development, right? Because right now it definitely impacted a lot the developers, the coders, and how we build SaaS, how we use SaaS, and how we use software as a whole, right? But outside of that, there is not yet massive use cases, right? There is not something that's completely revolutionary as of now, right? As of today. So SaaS are used everywhere, so that's how they are actually impacting other industries, right? Because we now use AI to actually, for example, do content for us, right? We are not a development agency, we are not a SaaS, but we use a lot of softwares to run our business. So AI impact us this way because it impact our SaaS, it impact our tools. But it doesn't change anything about content creation itself, right? The AI is not running the show at all, right? The AI is not able to connect the dots. It's not able to do the content as smart as what we are doing, I hope. And I will let the audience judge that, but I don't think the AI is able to do something as good as what we do. And this is really far from being able to do that, right? And I think that's the same for so many different in industries as of today, right? It's really good for development, for software, but for everything else, as of now, it's actually really bad and really far from being useful. So that's AI V1. There's a lot of things that are being built right now, a lot of things that are coming, and I really wonder what's gonna be AI V2.
Okay, let's end there. How does that sound, Martin?
Let's do that. I think we had a great show. We talked about a lot of different things. Let us know in the chat if you have any questions.
That is it, as we always say, for AGTP Daily. Thank you to everybody for joining us today. As Martin said, give us a thumbs up on today's video, subscribe to our YouTube channel, and follow us on all of our socials, on X, on Instagram, and on LinkedIn. Let us know in the comments on any of the platforms if there's anything else you would like us to discuss, or just a general question you have about the way we discuss technology. We will be back again every weekday at 11 a.m. Eastern Time in the United States. My name is Michael Waits. That was Martin Runford. I'm going to say